Barry, you were talking about all the money that's out there, and I think all the money that's out there is another reason, especially on the commercial side, that's going to not allow the market to crash. There's just too much money that's looking for distress, and they're going to lower their thresholds because they got to put it out, and you're not going to see 50% discounted paper on commercial assets. You will on residential. You can get them today, but not on commercial.
Barry, one other thing, and Mark made reference to something that I think is going to be a major issue in our industry, and especially on the capital side for the next year. When you call up, whether it's your friends at Lehman or your friends at iStar, and say to them, you know, what kind of yields are you guys looking for to make on this mezz loan or this equity investment? Over the past year, you hear numbers that have actually gone up. You know, it used to be 18% was a target number, and then you could even hear 20% returns. I think eventually everybody is going to start being honest with themselves in that you cannot invest money today, whether it's in a mezz position or an equity position, and look to get a 20% annual return. I just don't, unless, again, of course, you're really buying on a distressed property. But if it's a normal project, you can't go in at, like I said before, you can't go in at 6 and end up at 20 overall. The math just doesn't work.
Apollo announces in their public offering that they had returns from anybody from Apollo here? Okay. They said that they had returns of 29%. Since 1990,
Right.
to 2007.
Right, past years, you
29%.
Leveraged.
Right, leveraged as well. Jay's got a good point. A, that's leveraged, and B, that's the past. I'm talking about somebody who has a fund today looking to put money out into deals with the members of our audience here. No way. If somebody's really honest with themselves, maybe you can get 14 if you really get a good deal. But people talk about getting preferred returns of IRRs of 20, things like that. I don't see it in the real world in U.S. real estate.
Well,
Yes.
I think there were those types of returns, but one had to realize that when you were seeking those returns, you were also taking risk that came with them. There's not a riskless 20% return. There are 20% returns, but there's a level of risk that comes with it. And at some point in time, you'll lose your money.
Yeah.
You can't consistently expect to get 20 and have them be treasuries that you're buying. So, you know, I think it's just putting the risk together with the reward, your expectations, those two pieces together.
What type of structure is iStar doing now on mezz lending? What's the kind of, are you going to 80%, 85%? Are you charging 12? Are you charging 18?
12.
What does it look like?
Our mezz structures are all mid-teens and up, 15s and 18s, with points that we're not doing the entire capital stack anymore. I don't think that we will even get to, you know, this. We have looked back over the course of the problems we have had in the last couple of years, and the problems in the portfolio, in many cases, were thinly capitalized sponsors. A recipe for disaster is a $100 million deal where the sponsor has $2 million in and everybody else's money is the capital stack, because there is no wherewithal to feed that deal. The developer, the sponsor, the person who's supposedly the brains behind that deal has no ability to feed the deal. And so you're counting on junior capital, which by and large is other people's money, by and large financial investors, to step in and solve what may be a hairy condo conversion project, or who knows what it is. And there's just not that level of sophistication. So we're looking very hard at the true level of sponsor commitment in terms of dollars in the deal. And I don't, you know, those are going to be sort of 10, 15% requirements in deals.
So it's really getting compensated adequately for the risk and the hardwiring of the brain, I believe, causes us to change how we feel about risk from time to time. It may be true, it may not be true, but it's a feeling that the managers have. Isn't that right? Or do you, I mean, you can't really know what the risk is. I mean, you're humans in the company, and you just perceive a risk. And right now, you're uncomfortable, but yet people are investing in South America now. Remember when I told you things dropped by 50%? People, worldwide transactions, they're investing in South America. Now, if I get this straight, Brazil and Argentina have always screwed it up. Why would you invest there? They just can't seem to ever, anybody from Brazil or Argentina? They never have gotten it together. But in any event, who is making those decisions that that's where they should be? Because New York is too high, London, we heard, is too high. India, have any of you ever been to India? Oh, are there any people from India here? Oh, you're from India, you're definitely from India. Now, horrible bureaucracy, horrible. And people are going there and investing there. Low transparency. Don't tell all the numbers and everything. Why is the world going, a good part of the world today, going to India? Because
The government just liberalized the rules 2 years ago.
that we can make more money.
No, they would not allow foreign investment in India. Only 2 years ago it was liberalized. So there's a mad rush from all over the world to India because
You had to partner with Indian firms. Yeah, local.
so there's like 200-300% growth.
She's saying that, I have to repeat this for the video, there's 200 to 300% growth.
Because the land, it's all landlocked. 1.2 billion people in such small
All landlocked and very crowded.
very crowded.
Enormous wage growth.
Invest in land will just double and automatic. So the government has a quota system, nobody can get more than.
But we're not going to be outsourcing in India anymore long, are we? I mean, isn't India going to get like, I just talked to a guy from India. He trying to fix my computer. And I asked him, how much was he making? He wouldn't tell me, but I said, how long do you think, are your wages going up? And they're going up, he said, he did tell me that they're really going up.
They went up like, people lost their
Starts kindergarten in fall.
get them for $300 a month a few years ago, now they're like at $2,500. And the US dollar is going down so much, it's now coming back to the US.
So India, you mean outsourcing is coming back?
Yeah, it is, because even manufacturing is coming back, so even though, the real estate market, exports will go up, manufacturing will go back. So there's going to be growth in the economy, especially the depreciation of the dollar.
By the way, he said his name was Henry. Could that have been possible?